Today on Fear and Greed, hopes are rising that a low inflation reading due out tomorrow could trigger a cut in interest rates next month. Banks start using perks and cash incentives to lure customers, and Donald Trump ridicules Denmark, alienates Jordan, Egypt and Colombia, but pleases China, all in about 48 hours. Plus, bad news for the Albanese government in the polls, and the local auction market returns with a whimper. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Tuesday, the 28th of January, 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Back to business today, I think.
Yeah, it's funny, isn't it? It also feels after the long weekend.
Yep.
Everything kind of kicks back in. Though you could almost say that Donald Trump gave everything a bit of a jump start.
You know what I like? He did. But what I like about this time of year, with respect to everyone going to school, they're all going back to school. And so we parents get a bit of routine back into our lives. It does make things easier.
Yeah, it does feel like these holidays have been potentially the longest in history. Sean, the main story this morning, we should get a reasonably clear indication of whether or not there's going to be an interest rate cut anytime soon this week, with the release of all-important inflation figures for the December quarter.
That's right. The Australian Bureau of Statistics releases the December month and the December quarter Consumer Price Index tomorrow. CPI, big day. The headline rate will come in between the Reserve Bank's target range of 2 to 3%. That's good. We know that's going to be low because we have these electricity rebates from the government. We've had lower public transport costs. There's caps on childcare fees. There's a bunch of things there that'll make sure that headline rate sits between 2 and 3%. It's all about the underlying rate though, Michael. That takes out all the stuff that's volatile and gives us a real reading of what's happening with prices. That's one that the Reserve Bank likes. So, for example, this quarter, we've actually got lower housing costs. I mean, the actual national house prices fell during the December quarter. So that may well be part of the underlying rate, and that will drag that rate down. If for the quarter it comes in at 0.5% or lower, then it's going to be really hard for the Reserve Bank not to cut interest rates next month, according to economists. If it comes in at that 0.5% for the quarter, that makes it 3.2% for the year, almost in the range. Think about 0.5%. If that came in, if you add the 0.7% or thereabouts for the previous quarter and you annualize it, it's only 2.5%. If it comes in at 0.5%, times by 4. So the actual run rate for the full year is only 2%. That is well and truly within that 2 to 3% target range. Now, Governor of the Reserve Bank, Michelle Bullock, has made it clear that the bank will cut rates if it believes inflation is sustainably heading to target. 0.5% is the critical number. 0.6%, probably too close to call, and market economists reckon that the Reserve Bank would then wait till May. 0.7% or more, well, it's on hold.
This is obviously very important for homeowners, Sean. It's also important for people with business loans. It is important for many retirees, kind of on the flip side, for retirees who like higher rates, of course.
Absolutely. Yep.
And I suppose there is another interested party in all of this, Sean. It is extremely important for the prospects of the federal government being re-elected in coming months.
That's right. Now, the Prime Minister, Anthony Albanese, yesterday said he's confident of winning a majority government at the next election despite falling in the polls. The latest, the news poll in The Australian, shows that on a two-party preferred basis, the coalition is now in front 51 to 49%. It shows a significant shift in sentiment over the summer break. Not that easy for the coalition to actually form government itself. So at the moment, the ALP holds 78 seats in the 151-seat House of Reps. Coalition's got 55, Greens have got 4, Katter's Australia Party's got 1, the Centre Alliance has got 1, and Independents have 12. The reality is that it's very, very unlikely that the coalition can gain enough seats to form a majority. They've only got 55. They're going to need a lot more, basically 20 more to form a majority. The best hope for them is a minority government with the help of some of the independents and Bob Katter, those sorts of people. The government could form a majority government, but markets suggest it's probably going to be a minority government. Now, that means they're going to have to do deals with the Greens, the Teals, all those other independents. Those people will become very important. Bringing this back to the inflation outlook, if inflation comes in at 0.5% and the Reserve Bank starts cutting interest rates, well, that will certainly swing the mood of some voters. If we get a rate cut in February, or there's confidence that we'll get one in May, then that will not only play into the government's popularity, it'll also probably play into when there's an election called. So what's happening tomorrow on the CPI is critical not just for the economy, but for politics as well.
So we could realistically end up with a minority government again. We haven't had one.
Oh, I'm going to get this wrong. So Gillard
since 2010, because it was Gillard,
Yeah.
Tony Windsor, Rob Oakeshott.
Yeah.
They were the
two.
Bob Catter went with Tony Abbott. Was he the opposition leader at the time?
Yes. He was the opposition leader.
I suppose we had a lot of turnover of leaders during that period.
Yeah.
So you know what, I think we can be forgiven for. But goodness me, that was a tumultuous period.
But what was interesting, that minority government, and some of this comes down to Julia Gillard herself, that got a lot of legislation through.
Good point.
And the thing about that is that they had to negotiate with minority parties. And in some ways, that is easier than trying to negotiate just with the Greens or the Coalition or Labor, depending on who's in government. So it's not the worst possible outcome for a country.
No, you're right there. Sean, local markets, they were closed yesterday for the Australia Day holiday, but plenty going on internationally. And unsurprisingly, Donald Trump is having a fair influence.
Yeah, so over the weekend, he suggested that maybe the US would take a softer stance on tariffs in China. Not surprisingly, no details there, but he said, he was thinking about it and maybe it'll take a little bit more time. He also called for interest rates to fall in the US. He said he knew more about interest rates than the Federal Reserve, and he wants rates to fall, his words, a lot. That sent the US dollar lower. In fact, the US dollar had its worst week since July 2023 last week. That helped the Aussie dollar. That's back to around 63 US cents. Trump's comments also put downward pressure on oil, with Brent crude back at $78 US a barrel, which hopefully should be good for us at some point in the future in terms of petrol prices.
Yeah, that'd be nice. Sean, after the show, we've still got plenty more to come, so don't go anywhere just yet. But after the show, we have an interview coming up. This one is an absolute cracker. You are speaking with Lucy Liu, who is the co-founder and president of Airwallex.
So I don't think I've had many interviews in my life that have been so honest. So Lucy Liu just tells it how it is. Airwallex is an incredible success story. It started in 2015. It basically facilitated the transfer of currencies between currencies. So you buy goods in one currency and pay for it in another currency. And it used to compete on price. That's where it started. It has grown, and it's got all sorts of products for businesses and individuals. And Lucy tells us the whole story, how we got to this point, where it sees its future. We talk about whether or not they're going to list. And Lucy is very, very upfront. She doesn't try and hide from anything.
And look, for that reason alone, I would say listen to this interview because, look, a lot of guests are very diplomatic around kind of questions when you ask them. Lucy, though, is just straight up.
Yeah.
And Lucy is only in her 30s, very young, very, 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 very impressive business leader. I loved it.
Yep.
Anyway,
it's great.
Definitely worth a listen. Coming up after the show, Sean, don't go anywhere. We'll be back in a moment with the rest of the day's business news. Sean, the big banks are using perks and cashback offerings to lure customers as competition between all the banks really heats up.
That's right. So deposit and everyday transaction accounts are becoming much more competitive. That's what happens when interest rates are set to fall. Remember, if you can actually use a deposit, if I'm a bank and someone puts a deposit in, I can then on-lend that. It's a really cheap way to get funding. So all of a sudden, they want our deposits. Banks were offering sign-on money, referral cash, ongoing discounts, rebates, reward points, donations, all sorts of things according to analysis by CanStar, which was done for The Australian. A few examples that I particularly like. So Heritage Bank's offering new customers $50 when they sign up and open a simple access account. Westpac is giving immigrants who have arrived in the past year $50 for opening a choice account and depositing $100 or more. Bank of Queensland, it owns Virgin Money. It's giving new customers 5,000 Virgin points when they open a Go account and make a debit transaction. And I like this one, Tasmania's Bank of Us, which is a customer-owned institution. It pledges to donate 1% of the account's average annual balance to a chosen community organisation. A lot of competition in that deposit market. Used to be in the mortgage market. Only ANZ now do those cashbacks in the mortgage market. The others have gone off that, but plenty of competition in the deposit market.
Can we talk housing, Sean? Can we talk auctions?
Oh, it's time. Yes.
We haven't done this yet in 2025. And
No.
really, after what would you describe the end of last year? I was looking for the best word to describe it. And really tepid, lukewarm.
Lukewarm, tepid, disappointing.
Yeah.
Meh.
The housing auction market kicking off again. 400 homes going to auction over the past week. So it's kicking off slowly.
Yes. The preliminary clearance rate nationally was 64.3%, which is fairly low, but not a lot you can read into that because only 400 homes went to market. Melbourne was busiest. That came in at 64.6%. Sydney had very few homes up for sale. Its early clearance rate came in at 59.4%. Adelaide had about the same number of homes up for sale as Sydney, and it was 76.1%. There were too few in the other cities. So, a tepid end to last year and a tepid start. Now, in case people have had a long, long holiday, I think it's worth recapping what happened last year. Over 2024, Melbourne, Hobart, and the ACT went backwards. Perth was the best, up 19%. Adelaide and Brisbane were very strong. Sydney was up 5-6% or so, though it was going backwards at the end of the year. Average home values were up nearly 5% last year. Now, for a median value, which is across all markets, that's about $38,000. And regions did better than combined capital city index. So that whole discussion about whether it was tepid or meh at the end of last year, this puts that into context. Wasn't that way in Perth, Adelaide or Brisbane. Certainly was everywhere else.
Yeah, that Perth figure is just extraordinary, isn't it?
Yeah.
And you've talked about that before, about the fact that this happens, that Perth is one of those markets that just has these epic kind of booms over a long period of time. But still, 19.1% across the year. It's quite spectacular. Sean, we've spoken before on the show about the rising price of coffee and cocoa, which is why the flat white and your Cadbury's bar is so expensive at the moment. Another soft commodity in the grip of rising prices is orange juice.
What was that movie? Now that I'm Trading Places. Eddie Murphy was in it.
Yes. Yep.
And there was a $1 bet between two rich owners about what was going to happen to orange juice prices. Am I right? I think that's right.
Yep. That's it. You are spot on. And ever since then, and that was what, in the 80s or something?
Yeah, I suppose so.
It's you just don't think of orange juice as a commodity, do you? You think of something you have at breakfast.
That's right. And the funny thing about orange juice, there's huge demand for orange juice, and therefore it's investable, and that's why it trades, and that's why we actually worry about orange juice prices. It's another soft commodity. We talk about hard commodities like metals and minerals, and soft commodities like cocoa and coffee and orange juice. It's up about 40% over the last year. Now, it peaked in September last year, but right now it's still 5 times pre-COVID levels. This is where climate change hits the breakfast table. Almost, well, not literally, but there is a direct correlation. So orange juice, well, it's actually frozen orange juice futures. They're traded on the Intercontinental Exchange, which is in the US. There is huge demand for them. Now, basically, it's all about what happens in the US and Brazil. 90% of the US crop is in Florida. They've, in recent years, hit by hurricanes in recent seasons, then really cold weather. Brazil's the world's biggest producer. About 2 years ago, it was exporting record volumes, hit by a drought. It's been hit by citrus disease. That's also hit some of the Florida crops as well. China and Mexico are also very big in citrus, oranges and lemons and limes and things like that. But really, the price depends on Brazil and the US. The impact of climate change in those economies has pushed, or really hurt production, pushed prices through the roof. And that's why when you go to the shopping centre and you buy your orange juice, it's just more expensive than it used to be. There you go.
My favourite soft commodity is a form of kind of pork futures and refer to it as lean hog. Like it's kind of cool, don't you think?
Lean hog.
Better than
Yeah,
fat
maybe.
pig.
Do you know much about it?
Hmm?
Do you know much about lean hog prices?
No. Look, I know that the name is very cool.
Can I go, like, let's in the next few weeks do a lean hog story?
Yeah, please do. I will hang out for that one, Sean. I'm very
Excellent.
excited. International news time now.
Yes.
Enough about orange juice, enough about lean hogs. Let's get serious. Donald Trump has started using sanctions against countries not bending to his will, ordering his administration to impose tariffs and sanctions on Colombia hours after its leftist president refused to allow 2 military planes carrying deported migrants to land. This is getting serious.
It's getting very serious. The new president is showing that he's prepared to use economic tools to get his political and social policies through. So initially the tariff on Colombia, which has been instituted pretty much immediately, is 25%. By the end of the week, he said it will go up to 50%. Colombia sells oil, gold, coffee, and flowers. They're the main things it sells into the US. Not a huge trading relationship, but it's significant nonetheless that he's just put in a 25% tariff, then a 50% tariff. Colombia has come back and put on tariffs on US goods just as quickly. Colombia and the US are allies. They're friends. Have been for years. The drug wars in Colombia, which have effectively been won, they were won with the help of the US. The two have worked closely together. Donald Trump's just shown that he isn't really considering old friendships, which is something that Australia should keep in mind. Also over the weekend, Donald Trump suggested mass deportation of about 2.3 million Palestinians out of that Gaza region to Egypt and Jordan. Egypt rejected that pretty much immediately. He ridiculed Denmark's efforts to defend Greenland from the US. In fact, his quote, "They put 2 dog sleds there 2 weeks ago. They thought that was protection." Pretty condescending. Then over the weekend, as I mentioned earlier, he said he's inclined not to put tariffs on China immediately. Mass deportation is in full swing. Chicago seems to be the centre of what's going on at the moment. Some illegal immigrants have arrived home in Central American countries in shackles, literally in shackles. Now, the ones going to Colombia didn't make Colombia, and in fact, they were being carried on a military aircraft, and the Colombian president said, we're not allowing US military aircraft into our airspace. Churches and schools have been raided. Now, traditionally, churches and schools have been kind of out of the target area for these sorts of raids. Well, no more. Certainly in Chicago, churches and schools have been raided. The administration, for its part, when it's been criticised for doing all this, has basically said, well, we're sending a clear message. We're showing that we're serious about it. And no doubt there's a clear message. They're serious about it. But you wonder about the compassion sometimes.
Finally, Sean, the US government is working on a plan to save TikTok in the US. It involves asking software company Oracle and a group of outside investors to effectively take control of the app's operations.
Under the deal being negotiated by the White House, TikTok's China-based owner, ByteDance, would retain a stake in the company, but data collection and software updates would be overseen by Oracle, according to a Reuters report. Oracle already provides the foundation of TikTok's web infrastructure. The whole data play was the reason that TikTok USA was banned in the beginning. The report says others interested include an investor group led by billionaire Frank McCourt. Now, Michael, you'll probably think Angela's Ashes, the Irish writer. No. He's a commercial real estate guy. There's another one, consortium talking, apparently, fronted by Jimmy Donaldson. Now, do you know Mr. Beast, the YouTube star?
It's a bit hard to avoid Mr. Beast.
It is very hard to avoid Mr. Beast. That is Jimmy Donaldson. And so there's talk that he wants to take over TikTok. He's a phenomenon, that bloke.
Yeah, an extraordinary success story. One of the most successful, probably actually almost the most successful YouTube personality.
With longevity, I think.
Yes, yeah, not kind of a quick fad. He's been around for a long time and has made an absolute fortune and has given a lot of money away, a lot of big promotions that he runs and gives away cars and all these kinds of things. And That would be interesting if he
That
took over
would.
TikTok.
If he took over TikTok, yep.
Wow.
Sure would.
All right, Sean. Up next, Fear and Greed daily interview. Check it out. Lucy Liu, co-founder and president of Airwallex, a great supporter of this podcast. It's coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And at midday, there is an episode of Ask Fear and Greed where we answer listener questions. Today's question is a very topical one, actually relating to inflation, which is coming out. The data is coming out tomorrow. Thank you very much, Sean.
Thank you, Michael.
It is Tuesday, the 28th of January, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.